So the Fed is about to repeat its biggest mistake ever. And last time it did this, ordinary people, gold and silver holders really, they got rich off of this. Because right now the Fed is in trouble. On Friday, last Friday, we got a jobs report that was absolutely brutal. 57,000 new jobs when everyone expected 110,000 new jobs. And not only that, they revised last month's banger job report down by 74,000 jobs. They just said, oh, we miscounted. It's actually 74,000 less. Now, I know that sounds like a boring number, but it isn't, because it shows cracks in the whole strong dollar narrative that they've been pushing for months now. The narrative that's been crushing gold, and it reinforces my decision not to sell a single ounce of gold or silver. If anything, I'm buying more physical gold and silver. But anyway, I'll explain why later. The thing is, the last time the Fed was in this exact position, the people who saw it coming, they made an absolute fortune. And the people who didn't, I mean, they lost half of their savings without even realizing it. And I'm going to explain exactly who won, who got wrecked, and what I'm doing with my own money in this video. So if you've got a pension, a 401k, or savings sat in a bank account, this hits you really hard. So you need to listen to this. Now, if you don't know me, my name's Nick. I've been a professional investor and unprofessional trader for 25 years. None of this is financial advice, and this is not an inducement to buy or sell any assets. And as always, do not take financial advice from some random dude on YouTube. Right, so to understand exactly what's happening here, we need to go back to 1971. Now, I'm not going to talk about Nixon ending the gold standard and all that crap. This is a different story. I've talked about that enough. But it is 1971. And Nixon, he's got an election coming up in 1972. The economy is sluggish, unemployment's too high, and he knows that you don't win elections in an economic downturn. But he's got a problem. The Fed controls the money. The Fed is meant to be independent. I mean, that's what the Fed is. It's meant to be independent. So what does Nixon do? He installs his own guy as Fed chairman, a bloke called Arthur Burns. Does this sound familiar, right, to what's happening right now? Anyway, and then he leans on him, and I mean he properly leans on him. It's all on the White House tapes, by the way. Like this is all recorded history. Look it up after this video. It's absolutely crazy. I might do a video on it. Anyway. His team planted fake stories in the press to embarrass Burns when he wouldn't play ball. They threatened to stack the Fed board with loyalists to outvote him, and eventually Burns folded. He cut rates into an economy that already had massive inflation problems. In 1969, US rates were up around 9%. By early 1972, Burns had them down to 3.5%, and the money supply was growing. They were printing money. So the economy roared straight into the election. Nixon won 49 states, and then the bill came due, right? Because it always comes due. It took a whole decade to pay off, though. Right? So inflation was about 3% when Burns folded. By 1974, it was over 12%. And when the oil embargo hit in late 1973 and oil roughly quadrupled in a few months, the inflation was already there, right? Inflation was already high, and then oil quadrupled. So the oil just poured petrol on that fire. So let's talk about what that decade actually did to people's money, because this is important, right? And it's the bit that no one really talks about, and it's the whole reason I'm making this video. Starting with stocks, between January of 1973 and late 1974, the S&P 500 fell about 45%, and it didn't come roaring back like everyone is used to these days. The market spent the rest of the decade going sideways while inflation ate people alive. If you had your savings in big stocks of the era, you lost roughly half of your purchasing power over the decade without ever selling a single share. The number on your statement, it barely moved. So what you could buy got cut in half, and that's the nastiest kind of loss, because you never really feel it happening. And it gets worse than that, by the way, because back then they had their own version of the Mag 7. They called it the Nifty 50. Xerox, Polaroid, IBM, Kodak, and the rest of them. There were a lot of them. So people called these one decision stocks. You buy them once and you never have to think again, because they are the future. Wait a second, does that sound similar? SpaceX, Nvidia, Palantir, they're saying the same bloody thing now, because history always bloody repeats itself and people never really pay attention to. Anyway, I'm getting mad. I'm sure this time is different. I'm sure that it's all good. Buy SpaceX, right? Just shut up and give them your money. So when Burns' inflation met those valuations, some of those stocks fell like 80 or 90%. And I mean, Polaroid never properly recovered. Decades later, it went bankrupt, I think in like 2006 or something. So that's the loser side. Savers, stockholders, bondholders, they all got robbed. And most of them, they never even noticed it happening. Now, the other side of that is gold. Gold went from $35 an ounce to $850 an ounce by January of 19. I say this in half my videos. You know this. You've seen this chart before if you watch my channel. But gold wasn't the only one of the winners. And that's that people miss about the 1970s. Oil quadrupled in a matter of months, like I said, and energy companies printed money for an entire decade. Commodities across the board absolutely ripped. Wheat, copper, cattle, sugar, all of it. And here's one of my favorites, farmland. Farmland absolutely went crazy. American farmland roughly tripled in value over the decade. And the food grown on it kept selling for more every single year. Some of the richest people to come out of the 1970s were farmers who just owned dirt and never checked stock prices in their lives. And they made a fortune. And to make this real, I want to talk about my dad for a bit, right? So in 1972, he was in his late 20s and he's done everything right in life. He's a business owner. He had about like 50 or 60,000 Aussie dollars saved up, which, you know, back then was serious money. It was like years and years of a good salary. It's split between the bank, some government bonds, and a nice chunk of it was in stocks such as Polaroid and Xerox, because his broker told him to. He said that those are one decision stocks, right? I don't know if he actually said that, but anyway, safe as houses. That's what they were told in the 70s. By 1975, his stocks are down by more than half. I don't know why I'm laughing at my dad's misfortune, sorry. So he holds on because everyone says that the market always comes back. This time it goes sideways for years while prices in the shops keep climbing. His bonds pay him their little coupon while inflation runs at double that. His cash earns next to nothing. He's just losing all the money he had. It's losing its value. By 1980, his statement says that he's got roughly the same amount of money as he started with, but petrol, groceries, house prices, they've all more than doubled. So he did nothing wrong by the rules he was taught, and he still lost half of his life savings in real terms. Meanwhile, the farmer down the road who never read a single broker report, he watched his land triple. Whoever held gold, by the way, whoever held gold coins in a drawer, they did a 24x. That was my dad's experience, and it's why I learned pretty young from him that gold beats fiat every time and to hold gold. Anyway, think about what actually happened, and I didn't listen to my dad, unfortunately, for quite some time. I only ended up starting to buy gold in like 2013, but you know, my fault. Anyway, think about what actually happened to my dad. He was in Australia, by the way, not in the US, but it was roughly the same effect in Australia and the US. Australia did fare a little bit better though, so it was even worse for people in the US. Anyway, one Fed chair folding under political pressure by Nixon made a group of people rich and robbed everyone else, and globally in a lot of situations. And nobody got to vote on this. The people who won weren't smarter or better connected. They just owned real things before Burns folded. Okay, so why am I telling you this in July of 2026? Why have you gone through this whole story? Because look at the setup we got today. A president publicly hammering the Fed for rate cuts week in, week out, a brand new Fed chairman handpicked by that president, and an inflation problem that hasn't actually gone away. It's only getting worse. And people have just stopped talking about it too, which, you know. Now, Warsh walked into that job talking tougher than anyone. First meeting, he comes in, he deletes the promise of rate cuts from the Fed statement, and he starts hinting at hikes. And gold crashed. I mean, it's up again last week a little bit, which is pretty nice, really. But it's been crashing. But Friday's job numbers, they've accelerated Trump and Warsh's plan, because a print of 57,000 jobs when you expected 110,000 and 74,000 more jobs deleted from the previous 2 months is the first real crack in this golden age of America's story. And leisure and hospitality, by the way, alone, they lost 61,000 jobs in June, which is crazy. But I'm going to talk more about that in a second because it's an important counterpoint, perhaps, to what I'm saying. Anyway, the thing is, unemployment is still at 4.2%, so nobody's really panicking yet. But gold did jump on that report, and it just had its first green week in over a month, which is nice to see. And here's where it gets properly interesting, because Warsh has already built himself an escape hatch to all of this. At his Senate confirmation, he said the inflation measures he prefers are what's called trimmed averages, where in his words, they take out all of the tail risk, all of the one-off items. And I'm going to explain what this means, because it just basically means he wants to remove all the worst parts from the inflation numbers to manipulate the figure lower, allegedly. So the inflation gauge Warsh prefers is designed to read cool at the exact moment your actual bills are running hotter, which means Warsh can cut rates and point at his choosing gauge and say, well, inflation's fine. Right? I don't care if you're paying 3 times more for groceries. This number here that we just made up, it says inflation's fine. But not right now, though. I don't think he's going to cut rates right now. I still think they need to keep this whole strong dollar narrative going just a little bit longer, at least until the midterms, maybe a little bit beyond that, but I think until the midterms. And look, remember what cutting rates into inflation actually does. Your savings account pays whatever rates are, currently around about 3.6%. If inflation runs above that number, everyone holding cash loses real value every single year, and everyone holding real assets gets paid. That's the world Burns built in the 1970s, or Nixon built through Burns. And if Warsh folds, we're going straight back there. And by the way, watch out how big money traded on Friday, because it tells you the exact same thing. It tells you what I'm saying. That job report was bad news for the economy, and bad news normally sends everyone hiding in cash. Instead, gold ripped higher on that report. Why did gold rip higher instead of cash? Because big money looked at the weak jobs print and they started front running a Fed that has just got handed its one excuse to cut. Even the America is fine crowd on Wall Street admits that if you read the small print, central banks are still buying gold month after month, and that they are going to cut rates into inflation. So the headlines say that the dollar's golden age is here. Meanwhile, the money keeps moving into gold. And look, I don't really care what the headlines say. I watch where the money actually goes. And when the money flows to gold, when they try to tell us to buy the dollar and the dollar is getting stronger, I kind of know what's up. Now let's talk about stocks for a second, because it's kind of important. So I said the Nifty 50 were stocks that could never go down. That's what people were told in the 70s. Well, this year, the Mag 7 has done worse than UK government bonds, right? The Mag 7 are supposedly the stocks that can never go down for this version of events. Microsoft, though, is down 20% in 2026. Meta is down 10%. And for some reason, people don't talk about this. They don't notice it. They think that everything is fine. 20% down is a lot. And the money hasn't left the AI dream, by the way. It's just piled into chip stocks instead, which are up 80% this year as a group. Now, everyone believed the Nifty 50 couldn't lose, and everyone believes the same about AI right now because they're absolutely delusional. But we already ran this experiment in the 1970s. People just don't like how it ended, so they just pretend it didn't happen. But I have to be straight with you, because this is where most YouTubers will scream buy gold and then roll to the outro. Today is not, and I don't like doing that, right? I want to present both sides of the argument. So today is not a carbon copy of 1971, and the differences, they do matter. First, oil. In the 1970s, inflation rode an oil shock. Oil quadrupled and it pushed the price of everything higher. Today is kind of the opposite, really. I mean, Brent crude peaked at $126 in April during the war panic. It's now sitting at around about $71, and Citi expects it to go down to $60 by Christmas. I don't know if that's true, but that's what they are saying. So this time, there's no oil shock, at least not yet. At least not yet, but there could be. And the inflation engine this time is not driven by oil, it's driven by tariffs. And cheap oil actually gives Warsh more of a cover to cut, not less. Second, gold's starting point. In 1971, gold had been pinned at $35 by law for decades. So it was basically a coiled spring. Today, gold has already run for 2 years, and even after a 25% crash, it's still above 4,000. So even if the direction rhymes with the 1970s, the size of the move, it probably won't come close. Anyone promising you that gold's going to 24x from here is completely delusional, and they're probably trying to sell you a course or something. And third, Warsh might not fold on my schedule. He could keep playing this hard money man well past the midterms if the data lets him, and if that's the plan. So gold could chop around or bleed for months yet, maybe for years. Hopefully not, but it could. And if you can't stomach that, well, you probably shouldn't be holding gold, because that's just how gold works. So what am I actually doing? The same boring thing I said 2 weeks ago, because my plan hasn't really changed. The evidence for it is just a little bit stronger now. I'm not selling a single ounce of gold or silver. I'm cashed up. I've got a fair bit of cash right now, and I'm using that cash to buy dips on commodities. I'm not trusting ETFs or any form of fake gold. I prefer real gold, real silver. Silver interests me even more than gold right now, by the way, because it's crashed nearly twice as much, and it's sitting around about like $60-ish. It had a high of $121, and when metals turn, silver historically runs a lot harder than gold. I'm still building copper and uranium slowly, but I'm planning on building those positions over years, because the world needs metals no matter who runs the Fed. And the stocks I do hold, they're pretty boring defensive ones, the stuff that sells like toothpaste, electricity, stuff that sells in good or bad times, right? So especially electricity, I'm bullish on energy infrastructure. What I'm not doing is trying to time the exact bottom, because nobody can. The people who got rich after the 1970s weren't timing anything. They just owned stuff before any of this happened, before it went up. So what's going to happen? What's Kevin Warsh going to do? Burns folded in about 14 months. How long do you give Warsh? Do you think he's going to fold? Do you think this is just all part of the plan? Drop your answer below. I'll read through everything and I'll probably respond. I mean, I'll respond to a voice note, with a voice note to most people. Anyway, I'll see you in the next one.